We've been telling you that the euro is currently gaining against the dollar, but it's still lost more than 3.5% over the course of this month. Well, our next guest says don't be fooled by relief rallies. The single currency is falling from grace. He's Ron William, technical strategist at MIG Bank in Switzerland. Ron, thanks very much for being with us. So first of all, we're talking technical analysis, which is not something that we do very often on this program. So just tell us what it is, first of all.
Technical analysis is one of the exciting ways of understanding market psychology and, most importantly, for investors and traders, when to time their opportunities in the market.
So it's a strategy that doesn't necessarily look at the fundamentals, but rather at the charts.
It looks at how the charts basically reflects the fundamentals in terms of price movements.
Okay.
And most importantly, how that market maybe affects the P&L, the profit and loss that each of us look at on a day-to-day basis.
Okay, so we want to talk about Europe. The CDS market's showing you something at the moment. So let's just bring up your first chart here, and you can take us through this and tell us what it means. Here we go. Credit default swaps at record levels. At
record levels, and it's basically a sign of risk, or the insurance of risk within Europe. What we can see there is Greece at the top, of course, as all the viewers know. But interestingly, I mean, just make the point that since May onwards, basically during the summer period, a lot has heated up. Greece has gone up several basis points, and that contagion has spilled through onto various other markets. In green, we have Portugal surpassing Ireland. That was something we were looking at the bank a while ago, and of course, most recently, Italy about to pass over Spain in white.
Okay, and what else are we looking at? The VIX as well.
So all of this contagion, all the psychological contagion spills over to other risk proxies, and the VIX, the volatility index, is a great proxy for that. For people looking at Europe, you can look at V stocks, which is the equivalent. Now, this is something I've been calling kind of investment sentiment at irrational lows. Despite many kind of market shocks that we've seen earlier this year, Middle East revolution, Japanese earthquake, sovereign default risks, the market has been very complacent. Now, complacency on this chart equals below 20 or 30.
Which is right where it is.
Which is right where it is. And notice that you do get massive spikes whenever there are kind of fear triggers into the market, contagion triggers into the market. And we saw that back in 2007, and then obviously more recently, I think about a year ago. So the same thing can happen now. And I would recommend that people actually look at these proxies just to see. So
you're looking at more volatility ahead. And one of the things that you've been saying is that technical analysis is actually a great thing to look at to try and back up whatever ideas you have in terms of the fundamentals when you're looking at trades.
Yes, I mean, I use both methods, but I would say technical analysis helps confirm the fundamental view. Sometimes there's a divergence, but at the very least it tells you what the market is actually pricing in. And I'd say during volatile moments, that is the most important thing.
All right, let's talk about the euro. I think we've got, I know there are two sides to this story. There's reasons that the U.S. should be weak, and there's reasons that the euro should be weaker. But let's just have a look at what we've got here. There we go. We've got the euro dollar. Tell us what this chart means.
So this chart's a daily chart since 2008 of euro dollar, and it just basically shows that the market rejected a while ago the 150 psychological level and is pushing lower. Now this is actually a monthly chart, I should say, and it just shows you that we've had sharp monthly reversals, as last seen just in the middle there, if you can see. The key level we should be targeting is 134 and potentially lower. And this is definitely on the back of European contagion, but also on the back of the US dollar story. And this is maybe something that is
so the euro's headed significantly lower, is what you're saying, and the US dollar is headed significantly higher. What are the fundamentals that back up the US dollar moving higher?
At fundamentals, I would say safe haven flows against the backdrop of decreased risk appetite. But on the technical basis, I would say it's maybe undervalued or oversold levels. We're at extreme oversold levels, and so for that reason, the US dollar should be due maybe up to a 30% gain on the dollar index, and we should see that translate onto the euro and various other
Is that your favorite
markets.
trade at the moment?
Yes, we've been calling it for some time, and it's actually unraveling as we speak.
All right, Ron Williams, thanks very much. Ron Williams, thank you.